If you're eligible for the winter fuel payment this year, here's the number that decides what happens to it: £35,000. If your total income is £35,000 or less, you keep the whole payment, no questions asked. Go over the £35,000 and, unless one of the 5 specific benefit exemptions applies, HM Revenue and Customs can take the entire thing back, every pound of it. £1 over the line, just as much as £5,000. There's a way to lower the figure HMRC checks against, but it depends entirely on how your pension contribution is made. Get it wrong, and a move that helps with a different tax bill does nothing here. I'll show you which kind works later in this video. Welcome back to Money Under the Microscope, helping you make finance clear. Now, I've been in financial services since 2005, advising clients directly since 2016, and I am a chartered financial planner. Today, the winter fuel payment, the £35,000 charge that claws it back, and the pension trap that catches people who think they've already covered themselves. Winter fuel payment is worth between £100 and £300, depending on your age and who you live with. If you live alone, or nobody you live with also qualifies, it's £200 if you were born between the 28th of September 1946 and the 27th of June 1960, and £300 if you were born before that. If your total income for the year is over £35,000 and none of 5 qualifying benefits apply to you, HM Revenue and Customs takes the entire payment back. Not a portion of it, all of it. Go £1 over the £35,000 and you still lose the whole £200 or £300. There's no sliding scale, and this is tested on you as an individual, not your household. If you're over the threshold and your partner isn't, you lose yours, they keep theirs. In Scotland, it's called Pension Age Winter Heating Payment instead. Same £35,000 charge, different amounts and opt-out process. Even if your income is over £35,000, 5 specific benefits can exempt you from the winter fuel payment charge completely: universal credit, pension credit, income-based job seekers allowance, income support or income-related employment and support allowance. Get one of those during the qualifying week, the 21st to the 27th of September, and none of this applies to you. So how does HMRC actually get the money back? For most people, there are 2 main routes. If you already file a self-assessment tax return, the charge goes through that. Otherwise, HMRC usually recovers it through your tax code, so you pay a bit more tax each month through your pension or your pay. Here's the bit worth knowing ahead of this winter. The 2026 winter fuel payment isn't clawed back straight away. HMRC recovers it through your tax code for the 2027 to 2028 tax year. If you're liable for the charge on both the 2026 payment and the 2027 payment, HMRC recovers both in that same year's tax code. A typical £200 payment adds about £17 a month. 2 together takes that to about £33, just for that 1 year. Quick one before we carry on. Money Under the Microscope is a brand new channel, genuinely, just me and a microphone. If this is useful, a subscribe or a share means a lot more than you think for a channel this size. Right, let's get back to the video. So what actually goes into that £35,000? It's your total income. Everything you're taxed on, added up before your personal allowance comes off. That includes your state pension, taxable income from any workplace or personal pension, wages if you're still working, and savings, interest or dividends held outside an ISA, counted in full with no extra tax-free slice for this particular test. What doesn't count? Anything inside an ISA, premium bonds, and non-taxable benefits like attendance allowance or personal independence payment. If you're self-employed or renting out property, your taxable profit counts, though a bit might already be covered by the £1,000 trading or property allowance. A pension contribution can reduce the child benefit charge, but for the winter fuel payment £35,000 test, the way that contribution is made matters. Some people assume the same trick works here. Not all of it does. If you make a relief at source pension contribution, the kind where basic rate tax relief gets added on top, that does not reduce your total income for this test. Neither does gift aid. Both are worked out afterwards once your total income is already fixed. But if you're still working, a net pay workplace contribution can reduce the taxable pay going into this calculation. because it comes off before income tax is worked out. Salary sacrifice can work too, but slightly different. You give up part of your future salary and your employer contributes to the pension instead. So that sacrifice salary isn't taxable income in the first place. Same goal, completely different result, depending on how the contribution is actually made. If you're not sure which type yours is, worth checking out your pension provider or payroll team. If you know you'll be liable and you'd rather not receive money HMRC will recover later, you can opt out instead, so you'll never get the payment in the first place. The deadlines are different depending on how you do it. Online by 11:59 PM on the 20th of September, or by phone by 6 PM on Friday the 18th. It carries forward to, once opted out, you stay opted out until you opt back in. One quick warning. HMRC will never text or email you asking for your bank details to repay this. That's always a scam. So check your total income, know the 5 exemptions, and remember it's not whether you make a pension contribution, it's how. That's Money Under the Microscope. If this has helped, do hit the subscribe button and let me know in the comments where you already over the 35,000 or did this catch you off guard. See you on the next one.